Hey there, my friend and fellow trader. It's Will here over to fxace.com. First of all, welcome to the video. So this video is, as always, the weekly recap of our trades from the week before. And last week turned out to be a really great week. Everything ran smoothly. On this video, we're going to go over the actual signals that we got triggered. Okay, so if you're new to my channel, and you haven't subscribed yet, hit the subscribe button now. You can also head over to Facebook and join the Facebook group, okay? By simply searching the FXAce Professional Forex Signal and Educational Group, or simply finding the link in the description area of this YouTube video. Okay, so let's get into the trading from last week, okay? First signal we're going to go over is on the Euro USD. Okay, it didn't hit the pending order trigger, which was 114.3. This was the free signal I gave out last week, but we did have a MACD divergence signal. As I say each week, if you're trading manually and you see a MACD divergence signal happening within 40 to 50 pips of my trigger pending order, you can simply enter the trade. So the Euro USD trade did do that. It was on the signal list here to manual signal. Okay, if you're using my signals already, these are the trades that we got last week from just the pending orders, around 400 pips. If you also trade manually, you would have got around an extra 570 pips thanks to these three great manual trades here also. Okay, so USD CAD was also a nice manual trigger. It actually missed the pending order by 10 pips. So did the Euro USD, missed it by 5 pips. Okay, so that's why also looking at the charts and seeing these manual entries is also good if you have time to be at the charts. If not, we still made 400 pips on the normal pending orders. Okay, so British Pound AUD, we got a nice 160 pips on it. It did go up an extra 100 pips, but hey, we closed out on Thursday and we're pretty happy with around 400 pips. British Pound, Japanese Yen got triggered. Again, if we had it left it to Friday, we would have got stopped out in this pair. Okay, so it was actually also a good point that we left on Thursday and got out. Aussie USD was a great trade also this week. It did drop an extra 100 pips, but hey, we got 100 pips on it. And Aussie CAD again, 80 pips on it. Euro JPY, 15 pips on it. Okay, so we had just left the trades of Friday. Yes, we would have got an extra couple of extra 100 pips on the British Pound Aussie and the Aussie USD, but we would have got both. We would have stopped out on Euro JPY and British Pound JPY. So everything kind of adds up around 400 pips. So it was a great trading week. 570 pips extra if you were trading manually. So let's head over to the charts and have a look at the actual trades. So the free signal that I gave out last week was on the Euro USD. Okay, if you remember what I was talking about in the video, you can actually just go back over it from last week on the YouTube channel. So after getting absolutely smashed, not drunk, but smashed by the markets the week before, which a lot of my trades were stopped out, what I had to do was readjust to the volatility coming back in the market and move back up to the higher time frames where the actual money is, which is in the weekly and monthly charts. Okay, so if you know me for a while, you understand that I trade the higher time frames with my signals during the week. And the only reason I'd ever go down into a lower time frame is to see if there's a trigger, a MACD signal happening in and around where I'm looking to trade on the higher time frames. Okay, as I discuss each week. So the Euro USD, again, we were talking about this area up here. This is back from March. We had that flash rally on the weekly. It was a nice weekly area. And I was expecting price to come up into this area, which it did. I expected to rally up above 114 this week, which it did. The entry was, I was expecting to stop at 114.300 and then getting into the trade. That's where my pending order was. I went up to 114.2, so missed out on this by 10 pips or 8 pips with the penny order. The manual was a good manual entry. If we look at the 1 hour charts, we get the divergence signal here. Okay, so this actually happened after the FOMC meeting in the US. You can see the huge candle here, 100 pip candle. Okay, it actually would have popped up, triggered it, and then got in. So an hour after that, okay, personally, I didn't get this trade because it was in the middle of the night here in Thailand. Around about 3 a.m., 4 a.m. this spike would have happened. So personally, I wouldn't have got it. If you're in the US or in Europe and you were trading this, you might have got this MACD divergence signal. Okay, and you can see it was actually a nice fall from there. Around 170 pips it dropped from this MACD trigger. So you can see how it kind of works. We've got the higher time frame selling area. We have to zoom into the higher time frames, see if we can get a better trigger or a better entry happens. That's why I was looking at this daily area inside the weekly here. Around 114,300. Missed it by a few pips. Okay, but we got the MACD trigger. Okay, so if you watched last week's video and you took this trade off the MACD trigger, well done. Next one was a USD CAD. Again, this is another one, happened in the middle of the night from the FOMC meeting. Okay, USD CAD. Let's have a look. Okay, I was looking to enter this at 133, which was here. You can see we have this weekly area here from the gap up in, I think this gap up was in March. Yeah, start of March, we had this huge gap up on USD CAD. We also see the market dropping very heavily into this area, okay? Which, when you see the market dropping into this area from an area where it's taken off from before here, and it's dropping heavily into this area, it's basically telling you that it's lining up for a good buying opportunity, which happened. Okay, the pending order went right down to the bottom of this area, was at 133. We missed out on this by 10 pips, but if you look at the MACD trigger, okay, after the huge spike down, we get the MACD signal, which would have happened around here. Okay, and you can see a huge, nearly 300 pip rally up from this signal. Okay, so we're highly lucky with the pending order. If you manually entered this, you would have had a nice trade of the MACD trigger. So that's how it kind of works. We've got a higher time frame buying area. Previously, we caused this huge rally up. It's also caused a gap up in the market. It hasn't been tested before. Market's dropping heavily down into it, so expect a strong impulse buy up from this area. Okay, that's what kind of happened last week. Okay, off the first touch of that, and again, we actually had a daily MACD signal. We had a 4-hour MACD signal here, but this was the one when it came down near our entry and then rallied up. Okay, so good manual entry, just unlucky with the pending order. The next one was, so it's one of the trades that did get triggered. It was on the British pound Aussie. Okay, again, I have been trying this each week. This week we got 160 pips on it. And where is it? British pound Aussie. Okay, we head up to the higher time frames. Again, higher time frames is where the money is. The higher time frames is where you're going to get these big reactions that happen to 300 pips in the space of a couple of days, which has happened again on this. You have the, see here, we have this weekly area here. Reason being, swing low, new swing high, swing low, new swing high. The market's coming down into it. Okay, and market slowing down last week, and what I was actually waiting for, this was actually a change. I did change the signal on this, and we entered this on just after the OMC. I changed the signal to get this trigger at 181,600. You can see we dropped down during the FOMC meeting, and we got triggered on this at 181,600. It actually rallied up. You can see nearly 300 pips from there. We took our trade around, or exit around 183,200. If we had left the Friday, we would have probably only got 100 pips from this. Okay, so we closed on Thursday for around 160 pips. It was a beautiful trade. You can see what we actually get there also is the MACD signal. Okay, you can kind of see why it works so good inside these higher time frame areas. Okay, so basically what the MACD divergence signal is telling us, that the market is slowing down. Okay, that's what happened. Market comes down to this area. We just don't take this signal on its own. It's got to be inside a higher time frame trading area. Okay, so that was the British pound Aussie. Next one was British pound JPY. So it had been rallying hard the previous weeks. British pound JPY. Okay. And what I was expecting here, basically this was possibly a trend continuation trade, and it bounced off expecting it to bounce off out of this area here. So we had this swing low, rally, new swing high. Market comes down to test the last swing high that it took out, which was here, and then rallies off. Okay, so that was the kind of signal I was kind of expecting last week. You can see it has started to slow down at this area. Also off this, look at this. We are at a 50 fib line there now. That was the kind of trade I was looking at there. Just a reaction at this breakout area. Kind of might happen next week and continue up higher. This week it didn't happen. Okay, so looking at it now, this could be a swing high, new swing high, and this could be a taking off next week. Okay, so it did do what expected. It did fall, and it is getting reaction at this last swing high. Okay, I had it on the high here, 135.5. It dropped down further. We had closed out on Thursday via the Telegram group, so all was good. Next one was, so this was a great trade. It was a trade that ran smoothly from the start of the week. First trade that got triggered, and was on the Aussie USD. Okay, up at this, we're at the monthly area here. Okay, simple. Telling you here what I look for in the charts is an area on the charts and the higher time frames where the market has dropped hard from before. You can see here clearly the market has dropped very, very hard here on the monthly charts. So when price comes back into that area, we are looking for a possible selling opportunity. Last week we got stopped out in this, and the reason being I was looking for a sell opportunity at this area here. Okay, this was a weekly area that caused this low down here at the start of the move. We also had some resistance here. Unfortunately, volatility got back into the market and it popped up to the top of this monthly zone. Okay, so that's why it didn't work last week. Again, we don't get beat up about it. We simply adjust, reanalyze, and see, is it worth getting in again next following, or the following week, or the following trade? Is there still an opportunity to trade this pair? There was this week, and the reason being I was looking to actually trade this weekly area that it popped into last week. Okay, so I think it was 7,200 I was looking to trade it at, and it triggered very early in the week. I think it was on Monday or Tuesday. We got the trigger on this here, and it just ran smoothly most of the week. Okay, FOMC meeting, it did spike up a little bit, but you can see it dropped nicely from that area. And lo and behold, what did we get in at this kind of area here where we're looking to trade? We got a MACD divergence. So nearly every trade I take the reason I can do pending orders because I'm anticipating this signal happening. Okay, so if you're trading manually and you're inside these higher time frame areas, this MACD signal is a very, very powerful signal. MACD divergence signal is a very, very powerful reversal signal inside these kind of areas, and you can download this indicator free if you are new to the channel. Okay, so next trade is on Aussie CAD. Again, I readjusted my entry later in the week on Wednesday for this. Okay, reason being price action was kind of telling me to do so. You can see we're at this, we had spiked up into this monthly area last week. You can see this swing high caused this move down here. We'll zoom into the weekly charts, and initially I wanted this to move up a little bit to the top of this area, similar to the Aussie USD. And my initial trade last week was at 0.95 for 200 or something. I think I was expecting it maybe to gap up on Monday and then drop the rest of the week. That didn't happen. So on Wednesday, I readjusted my analyst and looked to see if the market was telling me we could re-enter this at a different level. Okay, so let's change this. I don't know why they have popped up. Okay, so I readjusted. My Aussie USD trade was going nicely, and you can see the market slowing. All last week it was up and down, up and down. So on Wednesday, this was where I actually changed the entry to 0.94, and you can see we actually got the trigger as it rallying up, just based on the lower time frame price action happening. Even on the 4-hour chart, you can see halfway during the week we are getting this period of distribution after a huge rally in price, and the market has started to kind of change its structure up here. So 94 was a nice entry for this, and you can see it actually dropped 100 pips from there. I'm trying to get rid of this box here. Okay. And again, I am expecting this could be a nice trade next week to fall further, but I'll do my analysis later. See, we are getting a lot of divergence signals. Last week, at the end of last week, we actually got a MACD divergence signal in the 4-hour chart. We actually didn't get any this week on the 1-hour. Price action, if you can read price action well, was telling us that this was a good selling opportunity around Wednesday, up around these highs here. Okay, so that was the AUD CAD trade. Next trade could have been a manual signal on the GBPUSD. Okay, let's have a look. $66.4 I was looking to sell this trade at. Okay, could get this monthly area here. A bit big just to be trading on its own. The range is kind of huge. So we'll zoom into the weekly chart, and so you can see this gap here that kind of got filled. This is where I was kind of looking to trade and maybe pop up a little bit further to the top of this zone, similar to the AUD Swiss franc. It didn't happen, didn't push up. It pushed up to around 66 and then dropped. Okay, but if you look on the 1-hour chart on Wednesday, again after the FOMC meeting, also on Monday, you're around 50 pips off and you get a MACD signal. Also, these pin bar candles are, if you trade candlesticks, I don't really trade those. If I see a nice pin bar in my area, maybe I will look at it. I just basically trade price action and market structure. higher time frame institutional buying and selling areas. Okay, that's very simple approach, as you can see. So the monthly, the weekly, daily. So we were looking for a manual signal last week on this using the service. You would have got a nice, possibly a Monday. Let's see, a nice 100 pips in that, and even further after the FOMC meeting, it actually dropped 150 pips. Okay, so that is this week's trades. Was a nice week, very profitable, and we got a huge chunk of pips back from what we lost the week before, and looking forward to the rest of the month. So if you're not a member of the Signal service yet, and you want a true set and forget service where you can simply just put the trades on the Monday, come back on a Friday and close them, then our Signal service is for you. So if any questions, let me know. Click the link below, get started now, and I shall see you on the next video, well over to fxace.com.